A very good evening to one and all. Thank you for joining for this third session of GST sector spotlight, wherein we provide inside details about one specific sector, one specific industry, one specific topic in GST, and go in depth about it. So, before we start, just a small brief recap. First session, which happened in April, which was taken by CA Sunil Gabhawalla. He had discussed about RCM in real estate sector. The second session that happened in May, which was taken by CA Yash Parmar. He had discussed about intricacies in the hospitality sector. And today here we are gathered to discuss the GTA sector, the goods transport agencies in GST. Without taking much of the time, we'll keep it crisp and let's begin with today's session. So basically, logistics sector, the goods transport agencies sector in India. Why is it special? Why is it so important? It is important because India is the second largest, India is having the second largest road connectivity in terms of the length of the roads which are constructed in the world, second largest in the world. The density is also very high. The road connectivity goes all the way up to the remotest of villages in India. We would have also heard about all of these new developments of expressways, national highways, the Atal Tunnel, so many things coming up. We also have a specific ministry dedicated for this sector itself. So, yes, the government knows it is important. It is a contributing factor to India's GDP. So, it is important, and that is why, as we unravel this sector, we will realize that the government has a soft corner for these GTAs. They have been given so many options, but also it has resulted into a lot of extra compliances and maybe some hodgepodge also with regards to the compliance aspect of the GTAs. So let's begin today. First, let me just brief you about what we are going to tackle today. So first, we'll take who is covered under GTA, what is a GTA, who is a GTA, and while discussing that, we'll also see what is not a GTA, who will not be a GTA, and in all of this, we'll also see when forward charge will apply under GST and where reverse charge will apply. And when doing either of these, what are the intricacies involved? Then we'll take up what are the compliances and issues which a GTA, who is a supplier himself, faces. And lastly, we'll discuss from a recipient. The recipient can be any person who is paying the freight, who is recording the expense of transportation in his books of accounts. Okay. So, who is a GTA? Who is a goods transport agent? So, here the GST Act itself does not specify or give the definition anywhere. So, what the government has done is, instead of giving this as a part of the Act itself, they have provided a definition by way of an explanation in the rate notification number 11 by 2017. Here, the explanation number 40. I don't know why they gave it 4x instead of an XL, but yeah, explanation 40 talks about who is a GTA. So there it says GTA means any person who provides services in relation to transportation of goods by road, and second, issues consignment note by whatever name called. So there are two key parameters that must be satisfied by the supplier to treat himself as a GTA. First is the services should be in relation to transportation of goods by road, and second is he must issue a consignment note. Now, what we'll do is I have tried to explain and break both these aspects one by one so that there is better clarity, so that we as an audience also understand who is a GTA and who is not a GTA. Okay. So let's take up the first parameter, services in relation to transportation of goods by road. Here, the word in relation to widens the scope of the GTA. So what happens is, if for example, there is some additional small work, okay, some additional work of loading, unloading, packing, unpacking, which is done by the GTA. But very important, the principal activity for which you have hired him is transportation of goods. In that case, all of these activities would also be considered as part of transportation of goods only by virtue of the definition of composite supply of services. Okay. Here, it is important to know that, for example, if the goods are being transported from Mumbai to, say, Kolkata by road, then if in transit, for some reason, the goods have been unloaded and temporarily stored for a few hours, maybe on account of, for example, the drivers are changing, or another vehicle is going to continue the journey forward, or there is a breakdown. So all of these activities of, including some temporary warehouse, where the principal activity is transportation, then all of these activities would also be considered as part of transportation of goods by road. Okay, so here we've analyzed in relation to. The next aspect is transportation of goods. Obviously, since we are talking about goods transport agents, the transportation must be of goods. There is a specific entry for courier, and courier talks about time sensitive documents. So unless it is a time sensitive document, it will be a courier service. In other case, it will be treated as transportation of goods. And last condition is that the transportation should happen via road. So it automatically includes other means of transport such as ocean, sea, inland transport, rail, air, and obviously courier services. Here it is important to also to know that transportation of goods by road other than a GTA and courier are exempt. So something like say for example, the goods have been unloaded at X premise. From there they are been pulled in a hand cart and delivered to the factory premises, or it could be hand delivered also, and for that you are paying something. So in all of those cases, since it is transportation of goods and also on road, but it is not done by GTA, it will be treated as an exempt services under entry number 18 of the exemption notification. I hope this first aspect, we are very clear about it. We'll go on to the next aspect, the consignment note, issuance of consignment note. So what is a consignment note? Again here, no pun intended, but yes, no direction is given under the GST law for what is a consignment note. So what we do is we take hint from the earlier regime, the service tax regime. There in rule 4B of service tax rules, a consignment note is defined. The consignment note is basically a document which will be issued by the GTA against receipt of goods. So only when you have delivered the goods, he should be sharing that receipt with you for the purposes of transportation, and that document should have certain criterias, which are, it should be serially numbered, it must contain the name of consignor, consignees, the registration number vehicle which is carrying the goods, the origin and destination, and lastly who is going to pay the tax, because if the customer is the person who is paying the freight, if he is liable to pay tax, then that document will indicate who is the person who is liable to pay tax as well. So with that background, one can understand what is a consignment note. There is no fixed format given, but these are the minimum details which are expected in a consignment note which the GTA will issue. Now, why is this important? Why is this consignment note important? It is important because this note establishes that yes, the custody of goods have been transferred to the transporter and he is now responsible for the delivery to the consignee which is assigned. Also, this document will help if there is any if there is any loss, damage in transit. So this document establishes that yes, goods were not with me but with the GTA. And lastly, it also helps to establish that the tax liability, the person who is liable to pay freight is generally the person who is liable to pay tax as well. So basis that document which contains all of these details can be effectively captured and established as well. Now, once both of these criteria are met and it is established that yes, I am or that service provider is functioning as a GTA, he now has option. The government is very happy. So they have given them options. They can either choose forward charge or they can choose that their services be taxed under reverse charge where the recipient will pay the tax. So here it is important to note that the choice whether to opt for forward charge or reverse charge, it will always be that of the supplier, the GTA. The customer cannot dictate ये invoice के लिए give me under forward charge, for this other invoice you give me under reverse charge. So yes, even the supplier who has exercised this option that yes, I want to opt for forward charge, he cannot switch between the options based on the requirements of the customer. His customer will have to accept whatever he is charging. And this option, once it is exercised, we'll discuss how it is to be exercised, but once it is exercised, it must be followed for the entire financial year. You cannot have mix and match within the same financial year. Okay. And what we also believe that this option cannot be QA registration. It has to be for the entire PAN of that taxpayer, of that supplier. You cannot have a person having a registration in X state where he is paying tax under reverse charge. For the same GTA services in another state, he is acting as he has chosen the option for charging tax under forward charge. Because, for example, the issue comes is that in one case the tax ITC is eligible and in other case ITC is not eligible. So how can you establish that the same truck for which you have claimed ITC, you are eligible in one state and ineligible in other state? It presents a lot of complex scenarios which actually there are no answers for. So that is why we believe that the option must be QA PAN and not QA registration. And last but not the least, for a GTA, there is no option such as forward charge 18%. If he is charging 18%, then he is not a GTA because the law does not give you an option to charge 18%. The rates are something different. What are they? Let's see. So, as I was highlighting in the start, that yes, the government is very meherban on them. And why? It is because of this options. So originally when GST came in, there was only one option. All GTAs services, the tax will be paid under reverse charge by the recipients, and to the supplier, no ITC will be eligible. That was the original plan. But what happened was, once the GST came in, they saw everybody claiming credits. So they raised their concerns. No, no, we also want to claim credits. We also want to become eligible. So what the government said is, okay, since you all are saying so much, I'll give you an option. You either pay tax at 12% and claim ITC as a GTA, as a supplier, or you pay tax under, you request your customer to pay tax under reverse charge at 5%. As a supplier, you are not eligible to claim ITC in that case. So that option was introduced on 22nd August 2017. Now again there were some issues. Again the industry requested the government, and voila, the government gave them another option. So now there are three options available as a supplier of GTA services. I can either ask my customer to pay tax under reverse charge at 5%, for which as a supplier I will not be eligible to claim ITC, but my customer who is paying tax under RCM, he can claim the credit. There is a second option. I will pay tax under forward charge, but under this forward charge I will pay at 5%. But since I am paying at 5%, I am not eligible to claim any ITC. And last, the original second or first option, that is, I will pay tax at 12% and I will also claim ITC for a GTA. Okay, so this option was introduced from 18th July 2022, almost 3 years now, and yet there is confusion, and yet there is some type of unclarity which is there with regards to whether for an invoice which is received, tax is paid under RCM or forward charge. Okay, so now we come to the next aspect that we wanted to discuss, the compliance aspect. Now with respect to, or looking at from the perspective of the GTA. So let us take a case where he has decided that he will opt for RCM. He will opt for this scenario where his customer are expected to pay tax under reverse charge mechanism. So here first thing that he needs to decide is whether he wants to get registered or not registered under GST. Notification 5 of 2017 states that if I am only providing services which are taxable under reverse charge mechanism, then I'm not required to be registered. But here please note, as a GTA you will have a lot of other incomes. It could be scrap sales, it could be sometimes sale of car, which we believe would be taxable. And for that reason, when computing the total value of your services, it might not be such a good thing or the correct thing to not register when you have such other incomes which are taxable. So yes, the first thing that he needs to decide is whether he wants to be registered. So now let's assume that he has opted to register. Then he has to compulsorily issue tax invoice as per rule 46 of the CGST rules, and this tax invoice must have a flag that tax is payable by the recipient as yes. Okay. Additionally, rule 54.3 of the CGST rules require certain additional details which must be captured in the tax invoice, which are very similar to your consignment note. So if these details are captured in the consignment note, such as gross weight, consignor consignee details, the vehicle details which has transported the goods, the origin and the destination, what was the goods that was transported. So all of these details which were captured in the consignment note, the government does expect that these details are also captured in your tax invoice which is issued by the GTA. Lastly, the government again is very kind to the GTA sector. So yes, they are not required to generate e-invoice or IRN for their tax invoices. There is an exemption for that. Now, because they are registered, they are however required to file GST returns. They are required to pay tax, file returns either monthly or quarterly, whichever the scheme they have opted for. But here one must take note that they might not be eligible to claim ITC, but if other RCM are triggered, the other RCM liabilities like your, maybe if it is a private limited company, the director sitting fees, or for example, the rent a cab services or security services, any such service which are normally taxable, normally under reverse charge mechanism, those will be payable by the GTA because he is registered, and ITC of that will not be eligible. Now, the second scenario under the forward charge mechanism. So if I've decided that I want to opt for forward charge, what are the things that I now need to keep in mind as a GTA? Okay, so the GTA will have to make sure that he is getting registered. Then he files a declaration annexure 5 on the GST portal. It is a one-time activity, and in this declaration, the GTA will declare whether he wants to opt for 5% RCM or 12% RCM. Okay, once that is done, this declaration has to be filed before the start of the financial year, between 1st and 31st Jan and 31st March. So generally the portal opens this tab, say for example for 25-26, the tab was opened for 1st Jan to 31st March if you want to opt for forward charge. So here it is important to know that if you are a supplier of GTA services, your default option that that is considered by the government is that you will opt for RCN. Your customers will pay tax under RCN. Only if you want to opt for forward charge, you are required to fill this annexure. So once I've filled up this annexure, I also have to make sure that I issue invoice as per Rule 46. And now this time I have to make sure that I mention that tax is not payable by the recipient. I also have to make a specific declaration as specified in Annexure 3 in all the tax invoices that are issued. This declaration specifies that as a GTA, I have opted for paying tax under forward charge at so and so rate on the GST portal. So that declaration you need to be mentioning on all the invoices as a GTA. Then, as we discussed in the previous slide also, Rule 54(3) requirements will be required to be fulfilled. The e-invoice exemption continues as well. You are expected to file returns monthly or quarterly, as and ITC will be eligible only in case where tax is charged at 12% in forward charge and not for 5%. Okay, the RCM entries, because you are registered, will be applicable to the GTA as it is for any other registered person. Okay, so now again, say for example there is a heart change of heart of the GTA. He has opted for one and he wants to switch his option. So what happens in those cases? So for example, if the GTA was under forward charge and he wants to switch to RCM from next year, so in that case he has to file a declaration annexure 6, which is again a one-time activity. As long as you continue the same option you have exercised, so once you file annexure 6, you are informing the government that you are going to switch to RCM. That option will continue as long as you don't again file annexure 5 to switch. Okay, so you file annexure 6, but now what happens, what if I am under 12% and now I want to switch to 5% forward charge? Can I do? Yes, you can. You again fill up annexure 5 on GST, and as we saw that there were two things that you declare your rate and you declare when you declare. So there in the rate aspect, you declare that you want to opt for 5%. So once you switch, you have to file this annexure 5 with the correct rate. In both these cases, if you see, you as a GTA are moving from an activity which was where ITC was eligible to an activity where ITC is not eligible. So in both these cases, if you have claimed any ITC of capital goods, okay, the same will be required to be reversed in accordance with section 18(4) read with rule 44, wherein percentage system is prescribed for any capital goods which are availed in the last 5 years, and taking cognizance of these provisions, your whatever balance is appearing in ECL, that will also ideally lapse. Okay, because you are not eligible to claim credit, so whatever is there, that will also lapse. Last, what happens if I want to switch to forward charge 12% from next year? Either it could be from RCM or it could be from forward charge 5%. I again fill up Annexure 5 on the GST portal. I inform the government well in time. And lastly, it is important to note that any tax invoice that was issued to me before my transition date, then I will not be allowed to claim ITC for those invoices which are prior to the transition date. I hope we are clear with this aspect of the GTA. Okay. Next we take up is a few of the exemptions. So here it is, the first one is very important. The government says that if a transport vehicle is given on hire to a GTA, that activity is exempt. So here it is not specified whether it is a trip based hire or a monthly hire. In any case, once you can establish with documents that you had given the vehicle on hire to another GTA, then you are eligible for this exemption. It is important to note that in this case, the person who is giving his vehicle on hire, he will not issue a consignment note. Consignment note will be issued by the GTA only. Okay. Secondly, agricultural produce, milk, salt, pulses, rice, defense equipments, military equipments, relief materials. These are some exempted items which are continuing from the service tax regime. Those are also exempted. GTA services to URD person, except for your cooperative societies, body corporates, partnership firms, casual taxable persons. They are, in those cases it is taxable, but in other cases it will not be taxable. GTA services to central government, state government, union territory, the local administration offices, the government agencies, they are exempted. Here I would like to highlight that there was this exemption continuing from service tax regime, where if the amount of rate is 750 is less than 750 for a consignment, or it was less than 1500 for the entire trip, then there was exemption eligible for the GTA services, but that has now been omitted with effect from 18 July 2022. So there is no amount based exemption for GTA services currently. Next, we touch upon the place of supply rules. The place of supply in case of Indian customers, section 12(8) of IGST Act. If the service is provided to a registered customer, it is the location of the customer. In case of an unregistered customer, it will be location where the goods are handed over for transportation. Secondly, in case of foreign customer, in all cases, there is no specific rule. So we go to the general rule which says location of the recipient. Where the location of recipient is not available, which will be unlikely, it is the place of supply will be treated as location of the supplier. With that aspect, I would also like to touch upon the e-way bill connection, because GTA services are very closely linked to e-way bill. So I thought, let me take up one slide and discuss some of the important things. So as we all know that e-way bill is must in under GST. There is a value based exemption and there are certain items which are exempted, but keeping those aside, I think all movement of goods must be accompanied with a e-way bill based on the applicable limit. As a GTA supplier, it is important that the person who is in charge of that vehicle, the driver, he must be aware of the e-way bill compliances under the GST law. so that it does not happen that a new driver has come and just with the consignment note he has started his journey. He must ensure that the e-way bill is there with him. He must also be aware that whatever the goods that he has loaded in the truck, they reconcile with the details mentioned in the e-way bill. If not value wise, because that obviously he might not know also, but at least in terms of the boxes or the kgs or the weight aspect of it, he must be aware that okay, what he is carrying is is what that is specified in the documents. And as a recipient also, one must keep in mind that when you receive any goods, the goods are accompanied with a consignment note and an e-way bill as well. So that is a very important aspect as far as a recipient is concerned. Now, discussing the recipient aspects itself, what are the things that the recipient is required to keep in mind? So, in case where the vendor, the GTA service provider is charging under forward charge. So here, first and foremost, we believe that as a recipient, one must have separate ledgers in the books of accounts for accounting invoices of freight where the tax is already charged by the vendor, by the supplier, by the GTA, and you have already paid it to them. So this helps in annual reconciliation so that you are not required to pay tax again on the same freight transportation value. And as we all know, when department audit comes, freight ledger is their favorite ledger. That is one thing they will always want to check. Okay, how much freight, how much transportation expense they have booked, how much RCM they have paid. So once it is identified that this vendor is paying tax under forward charge, if there is a separate ledger for it, it will also help to tackle that aspect that when department audit comes, I know that this liability I am not required to pay under reverse charge mechanism as a recipient. Also, for all the invoices which are because the GTA is registered, he would have issued a tax invoice and that would be uploaded on the portal as well, while because he has filed his GST returns. So you make sure that you are reconciling it with your GSTR to be for claiming ITC. And as we discussed all of these, the aspects, the annexure 3 is mentioned so that as a recipient, you are also safe that yes, he is paying tax under forward charge and he has declared that in the invoice itself. And the details that we discussed, which are specified in rule for 54, they are also captured in the tax invoice which is issued by this GTA vendor who is registered and paying tax under forward charge. Okay. Subsequently, what if the vendor, the GTA service provider, he is registered, but he expects the recipient to pay tax under reverse charge. In this case, again, it is very critical that whatever invoices are uploaded in GSTR2B, if they are properly captured in the books in a separate ledger, you will be in a better position to reconcile them with your GSTR2B, because if somebody who is doing the returns regularly, he knows that this detail is very effectively captured in your tax comparison reports. And if whatever the RCM liability is appearing in your GSTR 2B, if you are not paying that amount in a particular month, this information immediately flows to the government. Okay, so please make sure that at least the amount of liability of RCM which is declared in GSTR 2B, that is paid in the same month. As we discussed, the tax invoice contains the details as per the provisions of the law. And lastly, the tax payable under RCM is paid within 60 days of date of invoice or payment to vendor, whichever is earlier. If you have received an invoice in the month of January, but which is pertaining to a period, say October 24, then in that case, your RCM liability has already triggered in December 24 and you are already running late. So yes, it is important that the provisions of the law require that tax under reverse charge must be paid within 60 days of the date of invoice or payment to vendor, whichever is earlier. This is in case where the vendor is registered. What if the GTA supplier is not registered? Then in that case, as a recipient, I am expected to prepare a self invoice, which is a must under Rule 47A. And this self invoice must be generated within 30 days, within 30 days of the provision of service or payment, whichever is earlier. So please don't confuse between, I think a lot of are, uh, are under the impression that the tax liability is 60 days only in either both the cases. It is not that it is not such a case. Under those cases where you are receiving GTA services but the vendor is not registered and you are required to generate a self invoice, you are required to pay the tax under RCM within 30 days of provision of service or payment, whichever is earlier. I hope I have successfully untangled the GTA sector for all of you. I have also tried not to exceed my limit, the time limit which is given. Uh, Thank you so much for joining in such a large number again for our sessions. I'll just see if there are any queries which are mentioned in any of the chats. Uh, uh, so yeah, one query which has been raised is should not GTA pay tax on FCM where service is given to URD? No. So if I have opted for paying tax under reverse charge, then in that case, if the customer is unregistered, if the customer is unregistered and he is not falling under those six specified categories, then it will be exempted. I hope I have cleared the doubt. The person who is opting to pay tax under reverse charge, he cannot pay tax under forward charge in any case. So if that service is given to an unregistered customer and that person does not fall in those 6 to 7 specified special cases, then tax is required to be paid under then the activity will be exempt and no tax is required to be paid.
Hello. Sir, I
Uh,
have one doubt.
yes, yes,
So, sir, I only raised this doubt. So,
yes,
if like I have been registered under GST, and if I am supplying services to the unregistered person, so in that case, there won't be any tax liability on me, correct?
correct.
Okay. Even though I have opted for the forward charge
No,
mechanism.
no, 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 not under forward charge. Under forward charge, you will pay tax.
Okay. And if I have not opted for the forward charge, and if I'm providing to URD, then it is exempt, correct?
Yes, correct,
Yeah.
correct.
Thank you, sir. Thank you.
Thank you. If there are no queries, then we'll wind up the session. Thank you so much, everyone. Wonderful to have you guys. Again, next month we'll come up with another sector, another industry, and we'll untangle it, make it less complicated for you. Thank you so much. Uh, Enjoy the Friday and have a great weekend ahead. Thank you.